Hi, everyone. I'm Betty, co-founder of Acala. We're starting this Acala Builders Series, where we will chat with founders and builders in Web3 to discuss ideas, innovations, products, and services that help advance our industry and mainstream adoption. Today, I'm very happy to have Elvin, co-founder of the MetaDefender project. They're building a first-of-its-kind decentralized derivatives marketplace for yield trading that vows to bring TradFi magnitude to DeFi. Specifically, their first products are purposely built for leverage LST, liquid staking token yield trading. Yields are analogous to interest rates in TradFi world, the derivative market of which is astonishing 500 trillion market. The underlying assets are just a fraction of it. So thus derivatives actually lies the key to Web3 mass adoption. And MetaDefender will launch on Ethereum, integrating with Pendo, and simultaneously on Acala to capture both staked Ethereum and staked Polkadot markets. There are a lot to unpack here, but let's first get right into it and welcome Elvin on board to have a chat. And so firstly, Elvin, can you introduce yourself and share a little bit of your background and what leads you to build MetaDefender?
Yes, hello everyone. First, let me introduce myself. For me, I joined the crypto world in about 2017. Before that time, I worked in a Web2 fintech company that providing infrastructure for Web2 peer-to-peer lending. At about 2016, we used to plan to build a centralized lending platform that allow people to use Bitcoin as collateral to borrow fiat money. But this plan is at last abandoned for legal reasons. And the next year, I left my company and started my way to crypto. And before MetaDefender, I have worked on a series of DeFi and NFTFi protocols. I always have passion on derivatives trading. And in fact, at the very beginning, when we first started the MetaDefender, we plan to build a really easy using betting map market. That is a V1 version of MetaDefender, somehow serves like a option trading marketplace. Since the LST became popular, I have tried lots of LST products and find many users talk about how to leverage their yield or complaining that the fluctuation of the LST yield. We all know that the yield of LST can vary between 6% to 3% according to the frequency of the on-chain activity. As LST is always compared with the maybe national debt in TradFi, it led me to think about the boom of interest rate derivatives market. So I think, what if I combine the widely accepted DeFi tools, for example, Perps, with the newly appeared LS tokens to build a interest rate derivative marketplace on chain? This is the beginning of the current MetaDefender. Thank you.
Oh, great. You kind of alluded into my next question is like, why are you building MetaDefender? So I'll go one step further is you mentioned derivatives markets in TradFi is magnitude so much bigger in its size. And however, from observation, there are only a few successful decentralized derivatives markets out there, namely GMX, Perpetuals, and a few others. However, none of them seems to be fit for purpose for yield trading, or maybe they are. So this is an area I want you to maybe go a little bit deeper and why those existing derivatives markets cannot be suited for yield trading, derivatives leverage yield trading, and how does MetaDefender come in and solve that problem? So so go ahead.
This is a very interesting question. And this is a significant difference between the TradFi and DeFi market. And for decentralized spots market, we can already see numbers of big or small DEXs with variable AMM or order book mechanism. But for derivative markets, maybe only GMX against protocol and DYDX. That seems all. We can find a very interesting point is that on TradFi, there are many kinds of derivatives, futures, contract, many kinds of options, swaps. But in DeFi, the only widely accepted kind of derivative is Perps. I think this is because in order to understand the complex financial derivatives, users need to have quite a lot of financial knowledge first. It is not that easy for most users. And in TradFi, we trade derivatives since it may bring us a much higher reward than just trading spots. Yeah. But in DeFi, there are many kinds of spots that can already bring us maybe 10 times reward or even 50 times reward, especially in a bull market. So users seems not to have to learn about the complex derivatives to get this kind of reward. As for perps, we really should thank for CeFi, and most DeFi traders came from the centralized exchanges, and perps is one of the most popular products in CeFi. Centralized exchanges have taught users how to play with perps, so it is easier to move the perps into the real DeFi. Yeah. Up to now, as is mentioned just now, there's no derivatives markets for yield trading. I think this is because firstly, there is a few kind of yield is tokenized. Tokenization is I think it should be called the basic logic of crypto finance. Everything should be firstly tokenized and then traded. So if something has not been abstracted as a kind of token, it is hard to be traded within the most popular DeFi infrastructures like DEXs or even perps. So I think only after tokenization is done, yield trading is possible, and yield derivatives is possible. Thank you.
Cool. Yeah, so you led to a very interesting point, is tokenizing yield. And then this is not unfamiliar in the sort of proof of stake network, where the proof of stake tokens becomes tokenized in the form of liquid staking token as one form of, I guess, yield. Obviously, in the DeFi world, you have many different type of yields from a different type of protocol offering them. But I think one of the main sort of theme that evolving here is probably the new base layer for proof of stake network will be liquid staking tokens, and they are essentially a tokenized form of the underlying staked assets. And then you are actually talking about one step further, is each of these liquid staking token, they actually encompasses yield inside of it, and you have to tokenize the yield for those for those assets. In order for next step is for folks like MetaDefender to actually be able to actually use it to build leverage trading, derivatives, perks, or whatever contracts that are interesting. So and this brings us another interesting question, is then for you in particular, for MetaDefender, why are you interested in yield trading, and why are you interested in LST yield trading in particular? What sort of draws you into this area to actually build and innovate?
Oh yes. Since let's take a look back. Since the DeFi summer in 2020, we have enjoyed liquidity mining and stake to earn and many things to earn, and etc. I believe many of us have dig the food coins at that time, a really high APR, but we all know that this APR is not that sustainable. And most of the digged tokens at that time, that is a native token or governance token of the project itself. So the higher the APR goes, the more token emission and the lower token value goes. Yeah. After realizing this, people start to talk about the real yield. Maybe profits should not only come from the project token emission. A project should really make money by itself. And in fact,
real sustainable yield. Yeah, long term. Yeah.
Yes. It should be really making money. Yeah. Instead of blooding, maybe like this. So in fact, if you consider in this way, maybe over half of the crypto projects are not really making money, are not really offering real yield. Yeah. So this is where LS token is significantly different from other kinds of asset. when we are holding a LS token, it could offer you the native token of the blockchain network. This is definitely the real yield. No yield, maybe no other yield could be more real than this one. Yeah. So within any DeFi system, LS token could be treated as the most healthy asset, I think. And on the other hand, we can see the value of LS token is automatically increasing. So using LS token as collateral in lending protocols or CDP formed stable assets could offer user a lower LTV, which means a higher capital efficiency. Yeah. So I believe LST would make the whole DeFi system more healthy, more sustainable, and more efficient. This is why we would like to work on it. Yeah.
Yep, then this is a good segue into MetaDefender. So then can you maybe at a high level briefly explain what MetaDefender is and what sort of products you are building?
In summary, we can say we have already seen that some DeFi protocols like PandoSwap, Pando Finance, they have created the yield trading market since this year, and our MetaDefender is the first yield derivatives market. In our product, users can leverage their LS token profit by trading yield perps, or use our strategy to get fixed yield without a lockup period, somehow like a demand deposit in a bank in TradFi. We are opening a way for mass adoption of LSD and DeFi.
And so there's a lot of jargons, in your talk, right? So you mentioned perps, derivatives. So maybe we'll just take a step back and a few seconds here to explain to our audience what are perps or perpetuals and what are derivatives. Yeah, let's go ahead.
Okay. But talking about derivatives, there is a corresponding concept that is spots. The most easy understanding way is in DeFi, we buy and sell different tokens like ETH, DOT, UNI, trading with these tokens directly on DEXs. This is called spots trading. And correspondingly, derivatives is a kind of set that there's one or more than one kind of spots underlying it. And the value of derivatives is decided from the underlying asset. For example, if something works like this, when the price of ETH rise $1, its price rise $2. We can see this is kind of derivatives, which is driven by ETH. And the futures contract, yes, is the most widely accepted derivatives in both TradFi and DeFi. So in the context of cryptocurrencies and DeFi, a perpetual contract, often referred to as perpetual swap, is a type of futures contract that doesn't have its expiry date. This means traders can hold their positions as long as they wish. These contracts mimic the price of the underlying asset and are commonly used for trading cryptocurrencies. They offer leverage, allowing traders to amplify their gains or losses. Yeah.
Cool. Yeah, so thanks for the explanation. I think that helps quite a bit users to actually understand what we're talking here. And then what you mentioned was, in the current derivatives marketplace, there are challenges for them to integrate LST yields. Maybe it's a liquidity problem, maybe there's other challenges, so that existing decentralized derivative markets is not able to, or is not in a good fit to actually incorporate leverage LST yield trading. Can you just go a little bit further on what are the mechanisms that MetaDefender uses to counter those problems, and what are the innovations that you have, to make yourself, you claim you are the, most capital efficient derivative market places out there for you trading. So yeah, so let's go ahead and dive a little bit deeper for us.
Yeah, yes. Now I think it's time to talk about how MetaDefender create in or maybe what did us create in LST area? That is our MetaYT and the redeployable LP. Maybe two new concepts. No, here's one thing that for both these strategies, we are teaming up closely with the Pando ecosystem. Well, Pando is already a big player in the yield market, and most of us have got understand on his principal token and yield token, which is called PT and YT. And we are tapping into Pando's yield tokens and the principal tokens, but not just that, but we are also making the most of the other yield boosting protocols like PinPi and Equilibra within the Pando ecosystem. So this is the background. Through our unique algorithms and framework, we aim to harness these elements to build a more effective solution. So let's talk about the details. First up, we have a Meta YT. That is from the Pando YT, the Pando yield token. Yeah. But it is a shiny new token standard. What it does is it pulls in the yield tokens or YTs and makes them ready for some leverage trading in perp market. It is somehow like having a tag for when the token was made and when the underlying YT is going to mature. Yeah, this means it's going to be covering it's covering both the yield you have already got, the realized yield, and the yield you are expecting to get, that is the unrealized yield. Yeah. For Pando YT itself, it is keep shrinking, I think. Maybe you can describe it like this. It keeps shrinking while capturing the yield from its underlying LST. So if you are interested on yield trading and want to add a leverage on it, it is quite difficult to use YT directly on many widely used leverage trading infrastructures like perp. Yeah. But after we get a Meta YT, we can think Meta YT is like a container. Yes, it's containing YT inside it. The YT is shrinking, but it's capturing the yield. And in this way, the Meta YT itself never shrinks. It becomes possible to be treated as a longable or shortable token on common perp swaps. Yeah.
So let me summarize so I understand, right? So basically MetaDefender on the Ethereum side at least, it's building on top of Pando Finance, and then Pando is actually a tokenization. It's a protocol that tokenizes yield, right? So that's the starting point, and then it tokenizes yield in a way that it creates two tokens. One is the principal token, which is basically like ETH. Without the yield, without the staking yield. And then the other side is the U token basically captures the staking yield of Ethereum. That's the YT token that you keep mentioning later on. And then with that as a base that tokenizes the yield, that MetaDefender goes one step further because the U token itself, the way that Pando tokenizes it, doesn't actually allow perpetuals or leverage to be able to integrate with these tokens very easily, because the value of the U token is actually keeps shrinking over time as it gets closer and closer to the expiry date of the U token. So I think folks has to dive a little bit deeper into Pando to try to understand what I'm talking about. But for folks who actually know a little bit about Pando, that should explain itself. But the meta tokenization is basically wrapping around the U token that give it life, which means it actually captures the unrealized yield as well as realized yield into that one token, which is the Meta YT, so that this becomes the basis for perpetual trading. So you can actually leverage long and short in the perpetual exchange, and then that's actually make everything that's possible subsequently. So hopefully that's I understand it correctly. Yeah, Elvin.
Yeah, that is correct.
Okay, cool. Then let's move on to your sort of the next point, the redeployable LPM, what it is and why is it exciting?
Oh yeah, so usually as liquidity providers, they can only we all have been liquidity providers on different protocols, and we can only put my liquidity into one protocol. Maybe it is a DEX, it is a perp like GMX and something else. So as our MetaDefender, it is a perp marketplace. It is a yield perp. as mentioned. Yeah, we have our own market maker pool and we have our own liquidity providers. But we have some more ways to let our LPs to earn more. So as our LP may hold our market making pool may hold many E's in our contract. We won't have these E's sleep in our contract. A portion of this E's will be deposited into panel swap, for example, on Ethereum, to be an LP again in panel swap. Yeah, since panel swap LP mostly don't suffer from impermanent loss, at least if you hold it maybe a quarter long or half a year long. Yeah. So this will be done, and this will be done through Equilibrium or PenPy to boost its yield. Yeah. So being an LP on MetaDefender, users can earn firstly perp fees and our DEF token, that is our native token, which will be explained later, and the panel token, since it is also the LP in panel swap. And even PNP or EQB token that is from his ecosystem, yeah, and of course, and panel swap fees. So you can see, I act as LP in this project, but I earn two part of incomes from the two ecosystems. And who doesn't like more rewards, right? And I hope this will answer your question.
Yeah. So cool. So that's great. And then so my next question is related to your next product that you mentioned in your release is you're also building a fixed rate product. And then I think fixed rate products are perceived as holy grail for mass adoption. There are numerous attempts to build fixed rate products in DeFi in particular. There's fixed rate lending in money markets like Aave. And then there's also others that use different mechanisms to build fixed rate product, but they are not real fixed rate because some of them actually change their fixed rate over a period of time, mostly because the markets are volatile. The underlying asset that they're trying to fix the yield on is going up and down, significantly. And that leads to the fixed rate product are not really fixing the rates. And it's nothing like the current accounts that we see in the banking system that we are familiar with. However, I know you guys are coming out and say, with MetaDefender, you are able to build real fixed rate product. And can you just explain a little bit more on why fixed rate products is so difficult in DeFi? And then second is, how MetaDefender fixed rate product is creating this real fixed rate.
Yeah. And I think first of all, we should understand where does the yield come from. Here we are talking about the real yield, not only the token emission. Yeah. And in any financial system, yield, or we can say the interest, come from the cost paid by the currency borrowers, directly or indirectly. Even the national debt, as the LST is always compared with it, the borrower is the nation, and the nation pays the cost. The cost they can pay is determined by the profits they can get from the borrowing money to engage in production. Yeah. So therefore, the more mature and stable an economic system is, the more linear economic growth will be, and the more stable the cost of financial borrowing in the system will be. Yeah. But in crypto world, at least for now, it is an economic system that is in early stages and of development, yeah, rather than a mature and stable system. Yeah. The demand for borrowing is uneven. So even like Aave or Compound, the top lending protocols on Ethereum, its depositor income depends on the interest paid by the borrower, and the borrowing demand may be high during a certain period of time during a bull market, and then fall into a downturn during a bear market, just like now. It must dynamically adjust the loan interest rate and based on borrowing needs. So it is difficult for them to give his depositors a fixed deposit interest rate. Yeah. And come to the situation of the LS tokens, taking Ethereum LST as an example. its revenue is divided into a maybe consensus layer and a execution layer. Although the income of the consensus layer is relatively stable, the income of the execution layer is largely determined by the frequency of activities on the chain, especially due to the we know MEV, the yield rate of many LSTs. Most of the LST protocols have MEV service by themselves. So the yield of it will fluctuate by up and down to about 20%. Even just in this year, we can look at the historical data. It can the yield can endlessly up and down, up and down. So of course, this provides some imaginations for the market, and it is kind of volatility that makes tokenized yield trading possible. But on the other hand, it is too difficult to build a real fixed rate market. At least only by the spots or the LSTs themselves. So talking about the protocol that we will deeply engage with, the Panda Finance on the Ethereum, he has gave quite a good solution for this problem, as known as their principal token. And holding up his principal token till the maturity will really give a fixed interest rate for users. But you must have enough patience to hold it that long, maybe a few years, 2 years or 3 years, even 3 years long. During this period of time, we know everything could happen. And if something happens that causes the user someday has to sell his PT out before the maturity date come, he has to sell the PT at the market price. And the PT market price may not give him the demanded fixed yield rate when he bought the PT. This is where we have a project, a product named MetaEarn. This is where our MetaEarn steps in. Let's still take PT as an example. When you first buy a PT, you get a fixed rate if you hold it until the maturity. And this rate is we can call it a target rate. We aim to fix it even if you sell PT out before the maturity. This is our goal. And now we have a known target rate, and on any day before the maturity, we can get a target price. We can estimate it. We can get a target price of PT, and using the target rate and how long have you hold the PT, we can get a target price of PT. And the problem is the PT price at that day may have a difference from the target price. But in Pendle mechanism, PT plus YT always equals one underlying. In LST, it is always equals one is. So if the PT price is lower than the target price, it must lead to the corresponding YT price is higher than the YT target price. YT target price is one is minus PT's target price. So still remember the yield perp about YT we mentioned just now. Well, if we build a automatic strategy like this, while purchasing a PT, you can open a long YT position at the same time. This forms a portfolio and you can hold it. So on any day after that, any day when you need to clear this portfolio, if PT price is lower than the target, your long YT position must have profit. And if PT price is higher than demanded, your long YT position may have a loss. So this means you fixed the yield of the whole portfolio. The yield is always equals the PT target price of the sell up day and minus the PT price when you bought it. This is the same as a demand deposit in a bank in TradFi, especially in the bear market. And many people may have idle funds on the blockchain, and I think this is a good way to deal with the idle funds for them. Thank you.
Cool. So again, let me try to recapture what you just said. So in this case, so we still go back to use Pendle as an example. So with their tokenization, the principal of the LST is the PT token, so principal token, and then it represents just the ETH without sort of staking yield, and then it is. And they do have I understand like Pendle also have a Pendle Earn that gives you this fixed rate product, but it's more like a lockup, right? So you hold the PT, but you have to hold it for a certain period of time, and it could be very long, 2 years or 3 years, without the ability to actually, taking out, but still earning the same yield that you are expecting. So if you want a fixed rate, you have to fix for a long period of time. So that's like a that's like a savings account or term deposit, something more like that. And then MetaDefender that comes in as challenges this user experience. So from what I heard is your product is more like a current account for saving and producing saving rates. Basically, you can save the money into the account, but then you can take out the yield anytime you want, without lockup, basically. And then the way that you do it is very smartly using the PT token, but also at the same time using the perpetual exchange or perpetual market that MetaDefender already created. And then you create this two-way sort of arbitrage or two-way hedging, to be more precise, that doesn't matter where the price moving up or down. And then you basically hedging the price difference and then give you the precise fixed rate that you are targeting. So if the price move up, then like you either get to the target price, or your perpetual helps you to get to the price if the actual PT doesn't get to that price. So so is that understanding or explanation correct from what you just said?
Yes, that is correct. This is correct.
That's very, very cool. And then I think that actually takes us a bit closer to what the so-called real world is operating, right? Because for a very long time, the DeFi world is operating at a very superficial level, which is the spot market. Yeah, everyone is trading in real time and then trading like spot for everything that they are doing. But in the real financial world or TradFi world, there's layers to the trading. There's derivatives, there's instruments that can be used to not just for speculation, but actually for people to hedge their risk. Because if your interest rate goes up and down, that's not good for business, right? That's also not good for trading. If you know where things, if you try to predict where things are going, or you don't want to expose to the risk, then you use something like perpetuals to actually, encapsulate your risk at a certain level. And then on the other side, people who are willing to take on the risk, they get rewarded proportionally. That's like the long and short, right, version of the perpetuals. And I think that actually provides a lot of healthy sort of mechanism for traders, business operators, DeFi users, into a more mature market. So I think this is a great sort of leeway into my next question is like, so how does this all work when you launch, right? So because for you guys, you're going to launch on Ethereum, also on Arbitrum, I think, and of course, simultaneously also on Acala, Polkadot. So can you kind of explain the rationale behind launching on these chains? I think, Ethereum is probably very easy, and then maybe just explain a little bit about, why you choose to launch on these chains. And then talk about also rationale on launching on Acala in particular as well.
Yeah, okay. Firstly, our project is not a single project. We are going to coordinate with very top LST and LST5 protocols such as Pendle I mentioned just now. So our MetaWyte is utilizing Pendle's YT. So where these top LST protocols are deployed, where should we go and provide further services for users? And currently, when we talk about LST, the most widely accepted and well-known concept is Ethereum staking asset like STs, maybe SFRAX is. So of course we should not miss Ethereum. Yeah, this is a basic. Yeah, and we are a derivatives market. Although we have made the UI UX very simple and smooth for users, and our smart contract itself on the chain is not that simple. In fact, it's quite complex. Yeah, so it is very important for us to reduce the transaction cost. And Arbitrum is a low-cost layer 2, where there are already many derivatives protocols deployed there, and they are very successful. Yeah. And users on Arbitrum is very familiar with derivatives trading, and many kinds of Ethereum LSTs, such like STs, have been overridden onto Arbitrum. This is why we should be there. And in particular for Acala, I have many things to say. Yeah. First, this is an untapped market, I think. Maybe it's not that well known currently, but it holds great potential and would bring considerable income. Acala is the largest staked DOT project. That means the largest LSD project in Polkadot ecosystem, with large TVL, a huge numbers of stakers, and in fact, higher staking APY if you have tried it. Yeah. So building an yield market here creates the fantastic and exciting chemistry reaction. And Acala has built his own EVM compatible network called EVM Plus. Users who is familiar with EVM trading tools such as MetaMask will be very easy to understand how to trade on Acala EVM Plus. So we don't need to spend extra time to educate the users. And additionally, Acala has officially done a lot of explorations on LSD. And there will be official LSD protocols that we can deeply coordinate with, and they have incentive programs for LS token holders. So users here have more passion on LS token trading than elsewhere. And building with Acala team is a very pleasant process. They are open for high quality LS token projects, and the technical and the community support that they provide I can say is unavailable elsewhere. Yeah. So it is a good chance to do something on Acala EVM Plus network now.
I hope you're not saying that just to please me on the call here. But yeah, so it's very exciting to work with projects that are multi-chain. For Acala, we are also rooted for multi-chain. Although we build our base on Polkadot, but we're also collaborating with a number of projects in the Ethereum LSTFi space that are hoping that we can actually share and be able to build this liquidity layer, which is, Acala 2.0's vision is building this liquidity layer on top of Web3 that are agnostic to chains. So it is exciting to hear that you guys are building on Ethereum, Arbitrum, and also on Acala and Polkadot. And I think there's a lot of synergy there that a lot of things can work very well together. And then go a little bit further. Then is can you share a bit more on the actual products that you are going to bring to Acala and Polkadot community, so that audience here can get excited about?
Yeah. Okay. Just as mentioned, our V1 version is a option trading protocol. Currently, our LSD project is on auditing now. It will be available within maybe couple of months. Yeah. Before that time, we will first launch our option trading market on Acala network and face into some kinds of a set on Acala. Through this project, users can become familiar with the process and the principles of derivatives trading.
So this is leverage trading ACID.
Yes. The first,
cool. I think people would like it as a warm-up.
Yeah. Yes, and we haven't launched our own token yet, but users who interact with our testnet option trading product will be lined up for some airdrops in the future. So this is a good chance for users to play with us now. Yeah. And for our main LSTFi project, we will build a market allowing users to swap tokenized yield of staked DOT or trade them with leverage. This will cover most kinds of DOT LS tokens on Acala, such as L dot and LC dot, T dot, and other maybe upcoming kinds. Yeah. So that is a yield perp market, just like we long or short ETH and Bitcoin on sexes, we can long or short the yield of staked dot here. And on top of this perp market, just as what we do on other EVM chains, I mentioned before that a automatic strategy will be built offering the fixed interest rate for users, and users can enter or exit the strategy at any time. It will not affect the stability of his interest rate. So enjoy demand deposit on Acala chain.
So basically, it's like if I want to get a fixed, say 12% on my DOT staking, and I can just like deposit and go through the MetaDefender or MD earn, but I have the freedom to withdraw at any time I want and not get locked in. So that's the ultimate holy grail. So that's very cool. That's very cool. So those are the products that will be launching on Acala. So firstly, the options market for AC, and then there will be the U markets for a number of like dot derivatives, including L dot, T dot, etc. And then there's also leverage trading, so perps market on Acala. And then finally, that's the fixed rate product, MD earn. And then what can the community expect immediately after this? Like what's next on the list for MetaDefender?
Yes. Firstly, just as mentioned, the traders on our option market on Acala network will have the opportunity to get airdrops when our token is launched. And for the option trading itself, we will continue to hold trading competitions. And we will use a portion of the protocol revenue to reward the trading champions. That will be very funny. And after the launch of our yield perp on both Ethereum, Arbitrum, and Acala, a series of liquidity mining or trade mining activities will start. Users who act as market makers for yield perp or maybe trade on the yield perp, long or short the staked dot yield. And both of them could get our native tokens called DEF. This is easy to understand. So, and what is important is no matter whether he get a profit or loss on his perp position, I mean traders, yes. No matter whether he get a profit or loss on his perp position, he can get some DEF according to his position size as reward. And this may last not less than 2 quarters after launch. You may be interested in how to ensure the value of these DEF tokens. And the MetaDefender will have our own V token strategy and stake DEF into a VDF. Users can share a part of protocol income and other incentives from the ecosystem and coordinating DEFs. It will be a very good choice to play with us.
Cool. That sounds very exciting. So if people are interested, what is the best way to follow MetaDefender's progress and also participate in the testnet and also upcoming launch that you just talked about? What's the best way? Twitter or Discord or whatever?
So the best way to keep up with MetaDefender updates, just hit up our Twitter and Medium, both under the name of MetaDefender. We will be dropping all the latest news and companion details here. And if you have got any questions, our friendly crew at Telegram and Discord is always ready to help out. And we are launching on testnet maybe the next week. And to celebrate, we are kicking off a companion on Zilli with some pretty sweet prices. Don't miss out. By the way, you can find all the links you need right on our website. That is metadefender.finance.
Cool. Awesome. So go follow MetaDefender Twitter and also check out their website and also join their Discord to not miss out their upcoming testnet and also any of the mainnet campaigns. So so thank you, Elvin, and thanks for everyone who are listening into this call.